Good morning. I have somewhat of a question, challenge, and insight on a few pairs. Last night, if you've seen my previous video, I was essentially watching the NASDAQ and to see how it closed. But we'll get into that in a bit. For now, let me start off with Euro. So yesterday, we saw a sweep in liquidity. I'm not going to go on a higher time frame because we're still waiting for dollar confirmation, but intraday or intra sessions, we had a sweep in liquidity at this high after a consolidation, manipulation, and distribution, taking out the initial consolidation. After that, we essentially have a sweep in liquidity. At this point, we had news come out, a speech at 2 p.m. which caused this drop, then a retracement for a second entry, then a further drop from there. So sweeping liquidity, market structure shift at this point clearly, but let's just put it for the sake of those that would like to train their eyes to getting used to it. Market structure shift at this point, but we do not have any fair value gaps, right? On a 1 hour chart, we don't have any fair value gaps here. You could almost say that price was perfectly efficient in delivering sell side and buy side and everything that we may not even come back into this range. And then looking at these lows, we did not sweep the previous day low. I hope this is the previous day. Let's actually check now. Yeah, we did not sweep Wednesday's low. You can see the days there, Wednesday, Thursday. We didn't sweep Wednesday's low. So this would be the first target that I would have in mind. We can call them relative equal lows, or we can just call it sell side liquidity. So right now, if I was an intraday trader, I would wait for a manipulation above the midnight price, because this yellow line is the midnight price. So anything above this, I'll be taking to the downside, because we have a few PDRAs to work with. Even though we don't have a fair value gap here, we have an inversion fair value gap sitting right above the midnight price. Yes, we've tested it already here during the Asia session, but nothing is stopping us from coming back into it again. The second PDRA that we have is, consider the fact that we have a high, a low, a higher high, and a lower low without sweeping the sell side liquidity there, making this last down close candle to be a bearish breaker. So we also have this PDRA. Yes, again, price is efficient in this leg, in this entire piece, but if we do get a pull back into this range, this is an easy bearish breaker to trade. So we have two possibilities: trading into the inversion fair value gap on our left there, and then a continuation to the downside, or trading into the breaker. And the breaker also has this tiny fair value gap, this CB, and this inversion, this BPR here. So we might get price trade even as high as that. I wouldn't like to see it go that deep though. I'll prefer seeing it just trade in this area. So let's just assume price trade somewhere in the middle, then a continuation to the downside. So we have two possibilities. My invalidation point, especially in such a market, would be, let's just consider the fair value gap. So let's assume we go to the extreme at the high of the breaker, which has a fair value gap. We can just take this, the first candle that created the fair value gap. That would be my invalidation point. This is my setup for the day. Two ideas, same invalidation point, and first target. Of course, if it shows us willingness to go through that target, then we can look for the previous day's lows. For example, Friday's sell side liquidity may be the next in sight. So this would be my targets for the day. If we're able to get it, we might be able to get a few trades out of this. But yeah, so this is what I'm looking at on the euro. And the reason euro could retrace back into this area or deeper than this is because euro is the stronger of the two, right? So we expect massive push to the upside. On the other hand though, we have pound, GBPUSD, which we already know is the weaker of the two sisters, by the fact that we did not even sweep. This leg at 10 a.m. This was where the euro swept a new high, the initial consolidation, but pound already did it and could not even do it the next time it came. So pound essentially was respecting this order block on the 1 hour throughout yesterday. So if you missed the initial push to the upside, this push was tapping into the daily daily sell side imbalance. Let's actually check it out now. The push to the upside was to tap into this daily CB sell side imbalance here, and then rejection. And then if you missed that, on a 1 hour chart, we have the other block that was created with the fair value gap. You could have capitalized on that as well. Push to the downside. Let's actually make this a little smaller. Then a displacement during the news, taking out this sell side liquidity. So now going into the day and session, I would also be looking at the same candle. In this case, I'll be looking at the last down close candle before the push to the upside as my mitigation block. So it would no longer be an order block. In this case, it will just be a mitigation, a breaker block. It will be a mitigation block. So let's just call it bearish. I don't have a template for this, so we just call it mitigation block MB. So I'll look to see if price can trade anywhere into this area, then a fall down without taking this order block high. So this would be my invalidation point on GBPUSD. Checking this on the 4 hour chart, we should also note or keep in mind that we have this last down close candle before this push higher, and then creating a new high here. So I have an alert set at this level as well, because we could use this. The reason I'm also paying attention to this is the fact that we're gonna be in the 4 hour CB, 4 hour sell side imbalance, 4 hour sell side imbalance right here. So we could retrace back into it, measuring this sell side imbalance from high of it to low of it. We have the consequent encroachment right above this level within this candlestick's wick to body area. So that's why I'm paying attention to this as well, going into the day and going into the London session as well. Yeah, I'm looking for the high of day to be created somewhere inside of here, and if it goes higher, it will be inside of this mitigation block. So that's all I'm looking for going into today. Of course, the target in this case would be sell side liquidity, if we can get it, these relative equal lows, or these liquidities 1, 2, 3, creating a trend line of some sort. So I'd like to see if GBPUSD can get there by the end of the day. Nothing is forcing it to, but I would like to see that. And I like the fact that we have essentially completely retraced the move that NFP created, because this entire run up was NFP, this 1 and 2, and then Monday opened, we consolidated and manipulated to the daily weekly CB, and then a displacement lower, it created a daily CB, pull back into it, displacement lower. So I like the fact that we have bearish price action, and we have this initial consolidation here, which might complete the market maker sell model. So I would like to see that going into the conclusion of this week and next week. So that's all I have on the pound and euro. So moving on to the indices, if you watched my previous video, I was looking to see These annotations were actually from the night I was doing that. I was doing exactly that, I mean. So let's delete them. We don't really need them right now. I was looking on the daily chart. We have a, let's actually do this instead. On the daily chart, I was looking at this buy side imbalance. From here, from this candlestick's high to this candlestick's low. And I was looking to see if the daily candle from yesterday, this candle, would close inside or outside of it. And if we can see, we actually closed outside of it. Even though it's a few handles, we closed outside of it. I did not like this signature in price. I didn't want to see this, but we got exactly that. So now I'm still bullish on this because of this swing high, because of the fact that we are so close to taking the last month's high. But I don't know if they would like to use this, if they would like to essentially ignore the little body closure below it and push up, take out the buy side liquidity, and then continue down for a little bit for next week. I'm not sure because of the closure here. The reason I'm also not sure is when you compare the other two sisters, we can see that YM or US 30 or the Dow Jones, they remained inside of their buy side imbalance. So looking at this high to low, we have the candles, yesterday's candle remaining inside of it. And also looking at the E-mini S&P 500, we didn't even bother trying to close it. So the other two are still screaming bullish prices, while the NASDAQ is essentially lingering around. So I'm not sure what the plan is on the NASDAQ. It made me conflicted on my directional bias, but I would still hold to see if we can get more information during the New York session. So that's all I wanted to point out. Even though I'm still bullish, I would still like to see these relative equal highs swept, because we cannot be so close to taking October's high and then just back out from there without any real PDRAs to reject from. And we have this inefficiency sitting above us, so I don't believe that we are going to continue downwards. In any case, that's all I have for now. Good luck and good trading.